Hello and welcome to Project Trade. This is the price structure show, and in this one we're looking at fractals. Note that the fractals that we're talking about are not the subset of Euclidean space in mathematics. No, our fractals are much simpler than that. In trading, fractals are available on many trading platforms and they're packaged as a technical indicator, although they're not actually doing anything technical other than pointing out to you a particular type of candlestick pattern in the price. Now I know what you're thinking, an incredibly basic trading concept repackaged as something that at first sight appears to be well above its grade. This does sound like the work of Bill Williams, and you would be absolutely correct. This indicator is coming from Bill Williams, and it's out of his 1995 book, Trading Chaos. There's 5 candlesticks in a fractal pattern, which means that the pattern does take time to fully form. That's not to say that they don't appear regularly though, and technically speaking, fractals are not one pattern alone, but actually 2 opposite patterns. These are known as bearish fractals and bullish fractals. Here's a rough example of a bearish and bullish fractal so that we can immediately understand the basic patterns. On the left we have the bearish fractal. In that pattern, the center of the 5 candles makes the highest high in price of the 5 periods, with both candles before and after it having lower highs. Then naturally this is the opposite for our bullish fractal on the right hand side. In the bullish pattern, our center candle has to have the lowest low of the 5 periods, with 2 higher lows coming on either side of that center candle. The pattern isn't always going to come in a perfect order as we've laid out in our examples. They can look something like this too. The important part is just that for a bearish fractal, the highest high is in the center, and for a bullish fractal, the lowest low is in the center. When you're looking at a typical price chart with fractals plugged in, this is about what you can expect to see. As you can tell, they do come pretty quickly. You are never going to be short of a fractal signal if that's all you're waiting for to make your move. If you haven't ever seen fractals before, then I imagine they form a lot more than you thought that they would based off the description. Those regular appearances, that's probably not a good thing though, unless you have a fast moving system that's going to get you in and out of the trades quickly. There's so many fractals appearing that taking any entry signal from all of their manifestations would likely end up particularly problematic for your account balance. Another one of the pitfalls of trading based off of fractals is how much the pattern lags, because for the fractal arrow to be confirmed, you do have to wait for those 2 extra candles. So if you are back testing entries from a fractal forming, you'll always need to account for your entry coming 2 periods after the symbol. Otherwise, if you pretend that you're entering at the candle the fractal symbol is, then the trades will appear to be a lot better than they actually are in live trading. You'd always think that you just happen to get 2 consecutive candles in your favor after entering. They can really lure you into the gingerbread house like that, fractals. This all sounds very doom and gloom, but it certainly isn't to say that fractals cannot be useful. It's just a general rambling warning about trading fractal patterns alone without any type of combining strategy. So what use are they then? How can we utilize the fractals for entry signals on our trades? Well, we'll run with the basic idea that if we have a bullish fractal form where the center candle has the lowest low in price, then that's a signal for us to enter a buy trade. And if a bearish fractal forms where the center candle has the highest high in price, then that's a signal to enter a sell trade. Here's our example patterns. So that's our bearish fractal on the left that we're diving into a sell trade for, and a bullish fractal on the right which we're going to be entering a buy trade. If you want to know nothing but the caveman grunt for this, just go as symbol above means sell, below mean buy. Major warning coming here though. Warning, warning, warning. Those signals, yes, they are probably the most described method of use for fractals, but that is not how Bill Williams, the creator himself, used them. In fact, I'm going to say it, it's an incredibly shoddy entry signal that's going to struggle to ever get to profitability without some great filtering or some fantastic money management. Instead, Bill Williams typically used the fractals as part of breakout moves. That means that if price pushes above or below a particular fractal, it could signal a trade entry. So if price moved above a bearish fractal, you would enter a buy trade as it's on the rise and breaking out. Then the opposite time for a bullish fractal. If price gets to below that fractal, then sell trades are the fashion. Here we can look at a breakout example. In this scenario, you are waiting for either 2 consecutive bullish fractals or 2 consecutive bearish fractals. So you wait patiently and they do come there. That's 2 on the trot bullish fractals. So you can then look back for the previous bearish fractal, which is here. And you'll say that if price breaches that level, you are going to enter a buy trade. And that is where it happens. So you get into that buy trade, away you go. Although we can't see what eventually happens to price, I think it's safe to assume that profits are up there somewhere. Here's the reverse of that for a sell signal. We get 2 consecutive bearish fractals over in the top left. So we look at the previous bullish fractal, which is this one of course. We mark our line underneath it and say that we will enter a sell trade if price gets past that point, which it does do, but you'd have to be quick on the move, or even better, get it automated. Make sure you can snag those profits before price begins to retrace over a longer period of time. I for one am certainly inclined to believe that it would lead to profits somewhere. That 2 consecutive fractal method we've used for those examples, it is just a self-sufficient method for the signal, an all-in-one strategy for the fractal pattern indicator as it were. But in his original Profitunity strategy, Bill Williams liked using fractals in combination with his alligator indicator. In a sentence, the alligator indicator is 3 smooth moving averages. When it's on your chart, if those 3 moving averages are separated and running parallel to one another, that means the alligator is awake. It believes a trend is occurring in the market. When the lines are chopping over one another back and forth, that is the alligator sleeping because it is of the mindset that price is in a range. This frame here is our window where the alligator is asleep, those 3 moving average lines crossing over one another. That means we can then look at the fractals inside of that window and check the highest and the lowest fractal on the price chart. Then we'll say that if price breaks through above the highest fractal, we'll enter a buy trade, and if it drops below the lowest fractal, we'll enter a sell trade. In this instance, we do see that price goes beneath the lower fractal, and so we enter a sell trade and hope that we get all the profits that we look like we're going to get in these cherry hand-picked examples. Here's another one, this time for a buy trade. We see the alligator sleeping as price ranges with some low volatility. This is our window for where we'd be pinning out our fractals, with those 2 right there being the high and the low of the bunch. So when price breaches up through that high, we are happy to jump into a buy trade, and once again, wow, do we get some profits all the way up the elevator. That's just the basics though. The full Profitunity strategy, it does get a lot more intricate. Fractals are used further along in a trend as well for topping up your trades on retracements. And other Bill Williams indicators such as the awesome oscillator or the accelerator oscillator are sometimes used too. We've done videos on all those indicators plus the alligator. If you want to check them out, they are linked in the description. But it's not all about Bill Williams and his entry signals though. There's also the option to utilize fractals for money management assistance as well. Easy start, we can set our stop loss at the extreme point of the relevant fractal. So for example, if you enter a buy trade after a bullish fractal forms, you are free to set your stop loss at the bottom of where that bullish fractal appears on your chart. If a bearish fractal gets you into a sell trade, place the stop loss at the top of the bearish fractal symbol, or in the middle of the symbol, or at the closer side of the symbol to price. It's more about consistency than the exact spot you place it. Test out what might work best and go with it. As an example, if there was a particularly volatile asset that you're trading, you may want to set the stop loss at the outside of the fractal so you give it that bit of extra room as you want to avoid price spiking you out. This may be an option for taking profit too. So in a buy trade, you could set your take profit at the level of a prior bearish fractal, or for a sell trade, set that take profit at the previous bullish fractal. The problem with this is that there isn't a guarantee that the previous bullish or bearish fractal will actually be in the take profit zone. It might be at the wrong side of your entry price. Most of the time you'd be good for it, but as it's not certain and as the distance to the take profit can end up being quite varied between trades, this is a method that would lack any real consistency. And it's still there though. You could also shut off the trade after the formation of a particular fractal. If you're in a trade, you could say that after a bullish and or bearish fractal is formed, that's it, it's your trade, out of there you close down the trade. And these are just options for risk management. They're not going to set the world on fire if you're not using other indicators or if your entry signals are just plain bad. In the markets, the fractal pattern, it is going to appear across all different asset classes, so it's therefore feasible to use it in all the ways that we've discussed in any of those markets, be them forex, stocks or miscellaneous. It doesn't have to be just the 5 candles that you're looking for on the charts either. Some platforms will allow you to change the period input of the fractals, so instead of being the highest high or lowest low at the center of 5 candles, it could be at the center of 7 candles or 13 candles. It's a good way to reduce the signals that you're getting from the indicator and therefore hopefully adding some reliability to it. And if your platform doesn't give you the option of changing the amount of periods input, you can of course do this very easily if you are someone who is hand drawing your indicators, hand drawing your charts. It is going to be the future, so why not get practicing now? But whether you change the input of periods, whether you trade it in forex, metals, energies, none of this matters if you are taking fractal signals alone in the range. Picture yourself here taking a buy signal after every bullish fractal and a sell signal after every bearish fractal with no regards to filtering or breakouts or any other considerations in fact. And don't forget, your signal comes at the close 2 candles after the fractal symbol. Doesn't look so good, I would say. Seems to me like taking those trades would mean that you end up losing the game of trading. Even if you filter out half of them, it still ain't a pretty sight to behold. There we go, that's the range. Beware of it if you are using trend indicators. In conclusion, fractals might sound initially complicated, but once you understand the basic pattern and see them on the chart, it all becomes much more simple. That being said, on the default settings, they are going to appear a lot, and if you're taking regular signals from them, you're going to get into a lot of trades, which does mean inevitably that many of those signals will in fact be false signals. Fractals do still have their uses though. They can get you into trades, they can get you out of trades. There's established strategies like Profitunity where fractals have been used in conjunction with other indicators for consistent gains. Tried and tested if you did want to delve into the Profitunity strategy. Plenty to work with and plenty to test out if you do like an indicator which is highlighting to you this particular type of candlestick pattern. That's it for the video, but there is of course more information on the indicator in the description. And don't forget, every single chart that we show you has been completely pre-selected. We weren't in on all those trades taking profit, unfortunately. Sometimes it does take a while to find a good example, and that in itself can suggest that some of these signals may not be the best. But we have traded fractals in live forward testing conditions with real demo money, and those will also be linked in the video description. Thank you for watching. This is Project Trade. I am the spiritual elder of the ancient charts. There will be more.